Hello viewers, welcome to my channel. I'm Hashim Ali Khan. So in this video I'm going to explain you about profit in lieu of salary and retirement benefits. The benefits which are given by the employer to the employee, or on death it will be paid to legal heirs. So what is the tax treatment, what are the provisions, I'm going to explain you. So keep watching till the end, don't skip in between. So in the earlier videos I have completed 3 parts under the head income from salary. The first part, salary. What are the items that will come under salary? Second, allowances. What are the different types of allowances, classification of allowances, tax provision, all these things I have explained. Thirdly, very important, perquisites. In the last video I have explained all the perquisites, explaining that in detail. Now this is the last part, profit in lieu of salary. After this, 2 more parts are there, that is retirement benefits and provident fund schemes. After this, we'll do the last final problems on computation of income from salary. So in this part, if you want the complete command on the subject, watch the video, all the videos. If you are new to my channel, I suggest you to visit the playlist. I've uploaded so many videos on different subjects. Particularly select this subject, income tax 1, for the assessment year 2021. For this subject, you select the video income from salary. Watch in continuity first video, second video, third video, then only you can get the command. Otherwise, if you want a shortcut, just you want to solve the problem, it will be difficult. You will get the degree, but you don't have the confidence. To acquire the knowledge, in order to get the confidence, command on the subject, not simply to pass the examination. So from that perspective, I am giving the complete lecture in detail. So watch the video till the end, then only you can be able to get a good command. Now, profit in lieu of salary. This is the 4th part of salary income. The gross salary consists of 4 parts: salary, allowances, perquisites, and profit in lieu of salary. The total of these 4 is called gross salary. Now, what is profit in lieu of salary? In lieu means in place. Profit in lieu of salary means profit in place of salary. So if an employer pays an amount instead of salary, if the employer pays an amount to the employee in place of salary, not salary but an amount in place of salary, it is known as profit in lieu of salary. Generally, profit in lieu of salary will be paid when salary ceases to exist. When salary is stopped, then only profit in lieu of salary will be paid. It includes the following. So some examples of incomes which comes under the head profit in lieu of salary are few examples. While doing the problem, very rarely we come across the point of profit in lieu of salary. Very rarely item will come. But in examination, a theory question may be asked regarding explain the profit in lieu of salary. So this much of explanation will be enough. So it includes the following. First, any compensation due or received on termination of the service or modification of service conditions. Sometimes the employer will terminate the employee, or the employer will change, modify the service conditions. So when service conditions are modified or there is termination of service, at that time some amount is paid by the employer to the employee. That will come under profit in lieu of salary. Next one, any payment received from present or former employer in appreciation of services rendered. The employee is giving the service, appreciating the services rendered by the employee. The employer may give some appreciation amount, some amount in appreciation for his services. That will again come under profit in lieu of salary. Third one, refund from URPF, unrecognized provident fund. What is provident fund? In the next video I'm going to explain you different types of provident fund: RPF, URPF, SPF, PPF, etc. So URPF, unrecognized provident fund. So refund from URPF, employer's contribution and interest thereon. When a person will get the refund from unrecognized provident fund, in that refund employer's contribution and interest thereon is taxable. Next one is amount received under Keyman policy of Life Insurance Corporation. In Life Insurance Corporation, so many schemes are there. One of the scheme is Keyman insurance policy. So if a person receives an amount under Keyman insurance policy, that will be taxable under profit in lieu of salary. Any amount received before joining the employment from the prospective employer, future employer. If a person receives some amount from the future employer, prospective employer, that will come. So these are few examples of incomes which comes under the head profit in lieu of salary. In problems, very rarely we come across a point of this profit in lieu of salary, but theoretically you have to remember. Now, the following are not to be included on the head profit in lieu of salary. The excess amount over exempted limit is taxable as salary income. Few examples are given. It assumes it have the characteristics of this profit in lieu of salary, but it is not taxable under the head profit in lieu of salary. The unexempted portion will be taxable under the head salary. First item salary is there. Under the head salary, unexempted portion of this amount will be taxable. This amount will not be taken under the head profit in lieu of salary. So which are the items? First, death cum retirement gratuity. Gratuity paid at the time of death of the employee or during retirement, at the time of retirement. Secondly, commuted value of pension. Commuted value of pension. What is pension? What is commuted value? I am going to explain now. Then leave encashment. Leave encashment on the eve of retirement. At the time of retirement, an employee may encash his unearned leave, unavailed leave. Unavailed leave, he will encash it. Then fourth one, refund from SPF and RPF. Refund at the time of retirement, statutory provident fund and recognized provident fund. Retrenchment compensation up to rupees 5 lakh. So these items should not be taken under profit in lieu of salary. These items we have to find out if any unexempted amount is there. That unexempted amount will be taken under salary. Now, retirement benefits of employees. Now we are moving on to the next one. We have completed profit in lieu of salary. Now we got the gross salary. Now what are the retirement benefits which a person may get? Retirement benefits can be classified as pension, commutation of pension, gratuity, leave encashment, refund from provident fund. These are the items we are going to discuss. What are the provisions of Income Tax Act? Pension. Pension is the amount which is paid by employer to the employee after retirement. After retirement, when the employer pays some amount to the employee, that is called pension. Now, pension are of two types: periodical pension and commutation of pension. Periodical pension means when pension is paid monthly. Monthly pension is called periodical pension. The monthly pension received is fully taxable under the head salary. Under the head salary, periodical pension will be fully taxable. Periodical payment received from employer for past services rendered, periodical pension received is taxable under that salary. Now, commutation of pension. Commutation means lump sum. It's in this scheme of commutation pension, a part of the periodical pension will be commuted and paid in lump sum amount to the employee. For example, at the time of retirement, the employer will put two options to the employee. Do you want commuted pension or do you want periodical pension? If you want periodical pension, monthly you come and take your monthly amount of pension. That is fully taxable. Alternative, one more item is there. You can commute a part of your total pension. Monthly you will get suppose 30,000 rupees monthly pension, periodical pension. Now if you want to convert monthly pension into commuted pension, 50% of your pension will be commuted, only 50% will be paid periodical. Remaining amount will be paid pension in lump sum amount at the time of retirement. So at the time of retirement, if lump sum pension is received, that is called commuted pension or commutation of pension. Under this scheme, if the retired employee forgoes part of his monthly pension, he will be paid a lump sum amount immediately. That is called commuted pension. Foregoing the periodical pension and in return getting a lump sum pension. Now, tax treatment. For government employees, fully exempted. If the employee is a government employee, then commuted pension is fully exempted from tax. These points you have to remember while doing the problem. In the coming videos, I am going to do the problem on this pension, gratuity, etc. Now, non-government employees. For non-government employees, for receiving gratuity, for not receiving gratuity. Income Tax Act says for non-government employees we have to see whether he is getting gratuity and commuted pension or only commuted pension, no gratuity. So first case I am taking where an employee is getting gratuity as well as commuted pension. So for receiving gratuity, 1/3 of the commuted value of total pension is tax free. So if an employee is getting gratuity as well as commuted pension, in that case we calculate the total commuted value of pension. Out of the total commuted value, 1/3 of the total commuted value is exempted. Remaining is tax. Remaining is tax. For example, a person receives gratuity of rupees 1 lakh, commuted gratuity of rupees 1 lakh. We calculate the total commuted pension. Total commuted value of pension comes to 9 lakh, suppose. Total commuted value of pension. 1/3 of 9 lakh is 3 lakh. So up to 3 lakh rupees commuted pension is exempted, but actually he has commuted only 1 lakh. So it is fully exempted. It is fully exempted. Suppose he has received the commuted value of pension 4 lakh rupees. 4 lakh rupees he has received commuted value of pension. In working note we calculate total commuted value. Suppose the total commuted value comes to 9 lakh. 1/3 of 9 lakh is 3 lakh. So Income Tax Act says up to 3 lakh commuted pension is exempted, over 3 lakh is taxable. Suppose if the person receives 4 lakh rupees, then 4 lakh minus 3 lakh. 1 lakh rupees commuted pension is fully taxable. This will be in the hands when SSC is receiving gratuity and commuted pension. If a person does not receive gratuity, if a person receives only commuted pension, then half of the commuted pension, half of the commuted value of total pension is exempted. Here 1/3, receiving gratuity 1/3, not receiving gratuity half. So we calculate the total commuted value of pension. Of that total commuted value, half is exempted. Half is exempted. The remaining is tax. This is for the case of commuted pension. For government employees, commuted pension is fully exempted. For non-government employees, we have to see whether he is receiving gratuity or not. If he is receiving gratuity and commuted pension both, then 1/3 of the total commuted pension is exempted. If he is not receiving gratuity, only commuted pension is receiving half of the total commuted value of pension. Now next one is death cum retirement gratuity. That means gratuity is paid on the death of the employee to the legal heirs, or retirement gratuity will be paid to the employee. तो gratuity two methods में होता है. अगर employee का death अगर हो गया तो gratuity will be paid to the legal heirs. If the employee the gratuity is paid at the time of retirement, then gratuity is paid to the employee's hand. So death cum retirement gratuity. Actually, what do you mean by gratuity? Gracious payment made by the employer to the employee at the time of retirement. In recognizing his services rendered. The employee has rendered so many years of service to this organization. Appreciating that he has rendered so many years of service, the employer graciously will make the payment. So theoretically it is gracious, but nowadays it has become specific law has been passed to pay gratuity to the employees, right? So now from income tax point of view, we are seeing what is the tax provision regarding gratuity. So gratuity received by legal heirs on the death of government or non-government employee is exempted income. First point. When gratuity is paid on the death to the legal heirs, suppose Mr. X dies, now gratuity is paid to the legal heirs of Mr. X. That legal heirs are receiving gratuity. Whether he is a government employee or non-government employee, is fully exempted. Income Tax Act says, legal heirs receiving the gratuity of the deceased person, whether the deceased person is a government employee or non-government employee, fully exempted from tax. Secondly, gratuity paid while in service is not allowed as exemption, it is taxable under that salary. Second point, if gratuity is received during the service itself, no exemption will be allowed. The whole gratuity received is taxable under that salary. Now, government employees. For government employees, gratuity received is fully exempted from tax. whether central government or state government, gratuity received is fully exempted from tax. But that limit is limited up to 20 lakh rupees. Up to 20 lakh for central government. For state government of AP and Telangana, the state government has fixed 12 lakh rupees as the maximum exemption limit of gratuity. Now, non-government employees. Non-government employees are governed by Payment of Gratuity Act 1972 and organizations which are not governed by Payment of Gratuity Act 1972. So in India, we have passed an act called Payment of Gratuity Act 1972. And this act will apply on certain organizations. On some other organization, the act will not apply because conditions are given. If conditions are satisfied, then Payment of Gratuity Act will apply. If conditions are not satisfied, Payment of Gratuity Act will not apply. So here we have to study the provisions under two heads. Those organizations on which Payment of Gratuity Act will apply and those organizations Gratuity Act does not apply. So first, for non-government employees governed by Payment of Gratuity Act 1972. In the problem, when we do the problem, it will specifically be given that the SSC is governed by Payment of Gratuity Act or the SSC is not governed by Payment of Gratuity Act. For those SSCs who are governed by Payment of Gratuity Act, the least of the following three amount is exempted. The income tax provisions are given. Least of the three is exempted, the remaining is taxable. What are the three? First one, actual amount received. Actual gratuity received. Second, 15 days salary into number of years of service completed or a part thereof in excess of 6 months. Number of years of service, 15 days salary into number of years of service completed or a part thereof in excess of 6 months. And thirdly, fixed amount of rupees 20 lakhs. So in these three, the least is exempted and the remaining is taxable. Which one? First one, actual amount received. Second, 15 days salary into number of years of service completed or a part thereof in excess of 6 months. For example, if an employee has served 24 years and 8 months. 24 years and 8 months. So 8 months will be counted as 1 year. So 25 years will take. Suppose if a worker has worked 24 years, 4 months. So 4 months will be ignored. Will take 24 years only. So if 6 months or more, will take the next time. Then note, salary means basic plus DA of the retiring month. The month in which the employee retired. Of that month, what is the basic pay and what is the DA. That is the meaning of the term salary. Here we need salary. 15 days salary we require. So you must be clear regarding what is salary. So Income Tax Act says salary means basic and DA of the retiring month. Then 15 days salary is calculated as follows. Salary last drawn into 15 by 26. 15 working days salary we have to take. So we assume a month consists of 4 Sundays. 4 non-working days. So 30 minus 4, 26 working days. So we need 15 working days salary. So salary last drawn into 15 by 26 we have to get the 15 days salary. While calculating completed year of service, if the fraction is 6 months or more, then round off to the next year. If the fraction is less than 6 months, ignore the fraction. Just now I told. 24 years, 8 months agar ho raha to 25 years. 24 years, 4 months, if it is there, 4 months you ignore. These are the points you have to remember while calculating the exempted limit. For those non-government employees who are governed by Payment of Gratuity Act. Now, non-government employees not governed by Payment of Gratuity Act. For them, the exemption is list of the following two amounts. Actual amount received, first one. Second, half month average salary into number of years of service completed or fixed to rupees 20 lakh. Now compare these two provisions. These are governed by Payment of Gratuity Act. These are not governed by Payment of Gratuity Act. First 2 points are same. The first A point, actual amount received, here also actual amount received. Third point, fixed to 20 lakh, fixed to 20 lakh. Only second point is different. Here it is saying 15 days salary into number of years of service completed or a part thereof in excess of 6 months. This is the provision for governed. For not governed, it is half month average salary. Don't think that 15 days salary and half month salary is one and the same. No. The method of calculating 15 months salary, 15 days salary, and the method of calculating half month's average salary is different. Into here, number of years of service completed or a part thereof in excess of 6 months. But here only number of years of service completed. No fraction should be considered. That's the point. Now notes, average salary means any average monthly salary is calculated on the basis of average salary of 10 months immediately preceding the month in which the employee retired. Here we don't require average salary. Here we require average salary. So how to find out the average salary? Average salary of the 10 months immediately preceding 10 months of the month in which the employee retired. So in the month of retirement's month, before retirement's months, 10 months average salary we calculate. Salary means basic pay only. DA will be included if it enters for retirement benefit, and commission if it is based on fixed percentage on turnover. So while calculating salary, we should take basic pay only. DA will be included if it enters for retirement benefit, and commission if it is based on fixed percentage on turnover. So these three things we take for calculating the average salary. And lastly, while calculating completed year of service, fraction should be ignored. Even if the employee has worked for 24 years, 11 months. 24 years, 11 months. 11 months will be ignored, only 24 years will take. That is the point regarding completed year of service. So I have explained you in detail regarding profit in lieu of salary, then retirement benefits, regarding commuted pension, periodical pension, commuted pension, gratuity, and how gratuity is taxable. Still remaining, we have to discuss about this one. Commuted pension we have completed. Then leave encashment. Next topic, leave encashment, refund from SPF, and retrenchment compensation. That will take up in the next video. Come on, now we'll continue the remaining part of retirement benefits. That means income tax provisions on retirement benefits. Already two items I have discussed in the first part of this video, that is commutation of pension and gratuity. The remaining 2-3 more points we will discuss now here. These are the retirement benefits. We are studying the income tax provisions regarding the taxability of retirement benefits. Now, the next one is leave encashment. Encashment of leave period. Normally, the employer will allow some period of leave per month, per annum to the employees according to the service agreement. But the employee has not availed the leave. The employee can encash his leave period. So what is the tax provision regarding the encashment of leave? First point, during service period, encashment of leave salary is fully taxable for government and non-government employees. First point you have to remember. If an employee has encashed the leave salary during the service, not at the time of retirement, but during the service period itself, then it will be fully taxable. Encashment of leave is fully taxable for government employees and also non-government employees, if it is received during service period. That's one point. Second point, encashment of leave at the time of retirement. So normally leave encashment will be done at the time of retirement. Then what is the provision, income tax provision, if leave encashment at the time of retirement? First, government employees fully exempted from tax. So income tax act says, if the employee is a government employee, then leave encashment received at the time of retirement is fully exempted, no tax. For non-government employees, least of the following four amount is exempted, and the remaining amount is taxable. So what are the 4 points in which least is exempted? The least of the following four amount is exempted. First one, cash equivalent to the balance of leave period. Cash equivalent to the balance of leave period, that is unavailed leave at the time of retirement, subject to a ceiling on the maximum of 30 days leave for every year of service period. One ceiling is given by the Income Tax Act. that unavailed leave. For example, a person has served nearly 30 years. 30 years service he has given. So according to the agreement, the total leave available during his whole service is, let it be 35 months. 35 months. So out of 35 months, he has already availed 20 months leave. 20 months leave he has already availed. So deduct 20, 35 minus 20 is 15. Now unavailed leave period is 15 months. Now we calculate what is the cash equivalent of this 15 months unavailed leave, subject to a maximum of 30 months, 30 days leave for every year of service. That means, in other words, 1 month leave. 30 days means 1 month. For every 1 year of service, 1 month is the period. 30 years he has served, 30 months period. So whichever is least, either cash equivalent to the unavailed leave period or a maximum of 30 days for every 1 year of service completed. Now we have to calculate the cash equivalent for this unavailed leave. Second, 10 months average salary. 10 months average salary. Third one, actual amount received or last fixed given by the Income Tax Act 3 lakh. Fixed amount, fixed ceiling given by Income Tax Act 3 lakh rupees. Among these four, the least is exempted and the balance will be taxed. So these are the provisions regarding leave encashment at the time of retirement. Some notes you have to remember here. For calculating the leave period, the least of the following two, because there is a ceiling. There is a ceiling on the leave encashment. So what is the ceiling? Actual leave period during the service period as per service contract. We have to find out what is the service contract, how much leave is allowed by the employer to the employee, how much leave he has availed and how much leave is unavailed. So we have to find out what is the period of leave unavailed, or 1 month service for 1 year of service completed. 1 month leave for every 1 year of service completed. If he has completed 30 years of service, 30 months leave. So in these two, whichever is least, that will be selected. Then second one, average salary means average of 10 months salary immediately preceding the date of retirement. And salary means basic pay only. DA will be included if it enters for retirement benefit, and commission if it is based on fixed percentage on turnover. So this point you have to remember for calculating the salary. Thus average salary we require. Average means the 10 months average salary before the date of retirement. In whichever month he is retiring, before that month 12 months will take. We calculate the average of 12 months salary by taking basic pay only, and DA will be included if it enters for retirement benefit, and commission if it is based on fixed percentage on turnover. That's all. So these are the provisions regarding encashment of leave. Now next one is refund from SPF and RPF. Statutory Provident Fund, SPF, and RPF, recognized Provident Fund. So what is this Provident Fund? What is SPF, RPF, PPF and URPF? All these things I'll explain in the next video. But right now remember one point, refund received at the time of retirement from SPF or RPF is fully exempted for everyone, for government employees as well as non-government employees. The refund from SPF, RPF fully exempted. Next point is retrenchment compensation. When the employer retrenched the worker, retrenched the employee, and at the time of retrenchment, some compensation is paid by the employer to the employee. Now the compensation received at the time of retrenchment of the employee, how much is taxable, how much is exempted? Now we are going to study. The compensation received by a worker at the time of his retirement. The exemption is least of the following three amounts. Income Tax Act has given 3 amounts. Least of these 3 is exempted. Remaining balance is tax. First one, actual amount received. How much retrenchment compensation actually received by the worker? That is the first point. Second, amount calculated as per Industrial Disputes Act. In India, we have a separate law called Industrial Disputes Act. Under Industrial Disputes Act, law has given that how much compensation should be paid when a worker is retrenched. So this is the law according to Industrial Disputes Act. So what the law says, 15 days average pay for every 1 year, every completed year of service, or a part thereof in 6 months. So according to Industrial Disputes Act, retrenchment compensation should be paid at the rate of 15 days salary. 15 days salary for every 1 year of service completed or a part thereof in excess of 6 months. In excess of 6 months. So this is the limit given by Industrial Disputes Act. So we have to calculate how much is the amount coming according to Industrial Disputes Act. Thirdly, fixed amount. Fixed amount is given by the Income Tax Act, says 5 lakh. So in this 3 amount, whichever is least will be exempted and the remaining balance is taxable. This is what retrenchment compensation. Now last one is compensation received on voluntary retirement. Suppose if a worker has given voluntary retirement before his actual due date of retirement. Before the due date of retirement, he has given voluntarily retirement. So at the time of voluntary retirement, if he is getting some amount, some compensation, so Income Tax Act says how much is taxable, how much is exempted. The exemption is least of the following two: actual amount received or fixed amount of rupees 5 lakh. 5 lakh is fixed by the Income Tax Department. The least of these two is exempted, remaining is tax. On what? Amount received on voluntary retirement. Employer has given a certain amount to the employee on voluntary retirement. The least of the following: actual amount received or fixed 5 lakh. Now for giving this exemption, some conditions are given by the Income Tax Act. What are the conditions? Salary means basic pay only. DA and commission are included only if it enters for retirement benefit. So for calculating salary, here we need the salary, actual amount received. So salary means only basic, DA and commission will be included if it enters for retirement benefit. Secondly, this exemption is only one time, only once during the whole life of the SS. Voluntary retirement benefit will be given to the employee only once during this whole life period. Only once it will be allowed. Next one is, the scheme of voluntary retirement applies to an employee who has completed 10 years of service or completed 40 years of age. Any one of the conditions must be fulfilled. 10 years of service, if he has completed, then only this exemption will be allowed. If he has given the voluntary retirement before 10 years of service, exemption will not be allowed. Secondly, he has completed 40 years of age. Below 40 years of age, he has given voluntary retirement, exemption will not be given. Actual amount received is fully taxed. Third one is, it applies to all category of employees, that is workers, executives, but it will not apply to directors. So this provision will be applied to all type of workers, employees, workers, executives, managers, everybody except the directors. On directors, this law will not apply. The retiring employee is not to be employed in any other company or concern belonging to the same management. That means the employee who has been given voluntary retirement should not be engaged, should not be appointed in any other company, other concern in the same management. In the same management. These are the conditions for giving the exemptions on amount received on voluntary retirement. So I have completed the theoretical part of the retirement benefits. That means the income tax provision regarding retirement benefits given to the employee at the time of retirement. That is commutation of pension, gratuity, leave encashment, retrenchment compensation, then refund from SPF, RPF, voluntary retirement amount received. All these things I have given the complete explanation. After watching this video, we can start the problems. Few problems will solve on this voluntary retirement. Then we'll go to the last part, that is Provident Fund. Provident Fund, different types of Provident Fund. Then lastly we'll do comprehensive problems on salary. That will mark the end of the topic, income from salary. Income from salary is the biggest head under the computation of total income. So we have 5 heads of income: income from salary, income from house property, profits and gains of business and profession, capital gain, other sources. Out of this 5, salary, we are at the completion stage, and this is the lengthy chapter. So I expect my viewers to continuously watch from beginning till the end. Don't join in between and don't skip in between, because this law subject is difficult, because you have to remember all the provisions. If you are having the interest in learning the subject, then only. Otherwise, if you are intended only to pass the examination, this much of explanation is not required. Just you take shortcut method, you can be able to qualify the examination, get the degree, but you don't have the confidence. If you want to get a good command, have the patience to watch this video till the end. Then only you can be able to understand the problems. Okay, hope you are understanding my point. If you are satisfied with my lecture, give a like to the video. Share the channel in your groups, in your friends, so that more students can watch the videos. And lastly, if you have not yet subscribed, please subscribe my channel. I'll do the problems in the next video on retirement benefits.